Hello, everybody, and welcome to episode 26 of Bank to the Future Live. We're continuing our live interview series as new pitches go live on the platform. And today, I'm delighted to announce that we have Daniel, the CEO of DX.Exchange, and they have just gone live on the platform. We know that August has always been a quiet month for investing. But to get that kick-started, we thought we'd invite Daniel along so that he can share a bit more about what they've been up to at DX.Exchange, why it's different, and we'll go through the journey. So thank you for joining us, Daniel.
Yeah, well, welcome. Thanks for having me.
Great. Okay, so we first met, I believe it was in Hong Kong at a conference we were both speaking at. I remember seeing a lot of press out there when DX.Exchange first launched for a couple of reasons. Firstly, because you were giving people the ability to invest in more traditional assets like Apple stocks and things like that, using cryptocurrencies, which is, I guess, a use case for people that are not so connected to the stock market outside countries like the US to be able to get exposure 24/7 to traditional stocks using crypto, a new use case for crypto. And when we met in Hong Kong, I think you were just announcing the launch of your new security token offering. So why don't we just start right at the beginning, Daniel, and share with us like how you got involved in this sector, how you got involved in this industry, and the launch of DX.Exchange.
So yeah, that's correct. That's exactly how we met. And you're right, in Hong Kong, we were launching our security token exchange. But to back up just a bit before that, my background has been mainly in probably for the last 15 years in the online trading space, mostly in the derivative space, CFDs, Forex. And in 2016, I started seeing what was happening in the derivative space, where it was really getting heavily regulated. And I thought, this is a really great opportunity to kind of move everything towards an exchange type model. Because, when you're trading with a broker, you're actually, the broker is telling you, come trade with us, but then at the same time, they're betting against you. So it was really kind of this big conflict of interest. And all the regulatory bodies were kind of trying to push things more to an exchange where it's more of a P2P type environment. So actually, my partner and I, we started in early 2017, and the intention initially was to actually launch a derivatives exchange and have FX and CFDs on exchange. But as we all know, what happened in 2017, the crypto boom really, really hit its stride. And we thought to ourselves, look, actually, the exchanges that were coming out were unregulated. They're in weird jurisdictions or no jurisdiction at all. And we said, look, we came from this space. We know what it's like. Why not bring in, a real regulated with good technology exchange? We partnered with NASDAQ from a matching engine and a certain, market surveillance technology side. So we were kind of checking all the boxes, which was nice from a technology, from regulation, good brand names. And the best thing I think that we also brought to the market is we're really strong on innovation. And as you mentioned earlier, we kind of came up and we were the first ones to launch on the blockchain real world stocks. And, one of the reasons why we kind of came up with that idea was as our technology had been delayed, and I think people do know the name DX, and we actually just really launched last month, but we were delayed on the technology side. But while we're waiting for that launch, we started trying to figure out how do we differentiate ourselves, and then just being another Bitcoin exchange with lots of tokens. Yes, we had the technology. Yes, we had the regulation, but we started looking at how can we also do something different. And what we ended up coming up with was a clever way to basically take an ERC20 token and tokenize Apple shares, Amazon, Tesla, and we basically backed it 1-for-1 against a real world share from the stock market. So it was almost like it's like a stable coin. And what that allowed to do is kind of two things. One is, I think originally we thought this is great because there is 200 billion, 300 billion worth of crypto out there. People were looking for other things to invest it in. They could actually now take Bitcoin and buy actual real world shares, give them another way to invest their cryptocurrency. But actually, one of the biggest benefits that kind of came to fruition was the fact that it also opened up the world for stock trading and wealth creation to the bottom billion people around the world. And what I mean by that is, for example, in Indonesia, they're probably, I think they're the second or third largest user of Facebook. But they don't have any Facebook shares. And there's for two reasons. One, they don't have access to it, meaning they can't get to a compliance or they can't onboard onto some sort of stock brokerage to be able to purchase it. And two, even if they could, they probably don't really have the money for it. But by tokenizing Facebook shares, you can now buy a fraction of it. So they could put $10 in, $20, $30. And some in the Western world, maybe that's not a lot of money, but for a lot of these third world countries, or even in the Western world where there's very low income families, they didn't have access to that. But now they can actually have Facebook. And look, maybe that stock will be worth for them $50 or $80 or $100 or $200 in a number of years, but that's a lot of money for them. And then in a country that has 100 million people, and you multiply that by that many, that's a lot of real wealth that's been created that wasn't there before. And so that was really exciting, and we got a lot of really great press coverage out of that. And there was some other I think exchanges did some additional similar type of copycat, I guess you could say, after that. But it was really, really great to kind of come up with that innovative product and show the world how you could actually move, do things with the blockchain technology, not just for crypto, but for actually real world stocks. One of our visions is to kind of try to figure out how do we bridge that gap between the real world and this new world within the whole crypto industry.
So there's a couple of things that really stand out and why we wanted to work with you. So firstly, I'm just going to quickly share our screen so people can see now that the pitch is now live on Bank to the Future. For those new to the platform, you just simply, when you're looking for new deals, we have a couple of tabs here. One is our primary offerings, which is new deals that we're working with. It's a little bit slow right now because I'm also on the Zoom call, which is sucking up some of the bandwidth. But you can select the deals right here. You can see DX.Exchange here. We've got a couple live at the moment with Edge as well. When you go on there, you can see further details. You've got, depending on which country you're in. So unfortunately, at this stage, we're not able to open this deal up to the US. However, we are in the process of making some updates so that we can, at a later stage. The reason we extended this pitch for longer than we would normally do, we do a 30-day campaign. There was a couple of reasons. The first one is because August has always been a very quiet month for investing in companies. Just when we send out a mailer, you'll get millions and millions of out of office replies because everyone's busy with other things in August. We decided to make it a longer time frame. But secondly, we're also making some updates as so these deals on our platform are not open to US right now, but the goal is to get this signed off by the broker dealer, and we're just making some changes to our escrow provider in line with some more recent SEC updates that we're looking to comply with. So for now, if you're from the US, you won't be able to see anything. But our goal is within 30 to 60 days to be able to get that signed off as a 506c pitch so that we can then open that up. So we extended that. But you just head over here. On the first tab, you've got Invest, which is our primary offerings. And on the second tab, you've got our secondary offerings. This is not a secondary offering yet. So you can check it out here. And if you're a qualifying investor, then you just head over to the invest section. It will ask you to log in, and if you're new, then you can get further details. You can sign up there. Just going to stop sharing my screen and return back to the conversation with Daniel. So a couple of things that really stand out to me there. The first one is you were actually looking to launch an exchange, and you identified some issues with the brokerage model, was I think your way that you said it, whereby everyone has to sign up with an intermediary, and that intermediary works around office hours, and stock markets are open at certain times and close at other times. But most people would have to open up with a brokerage account. Now, as you said, somebody wants to invest $20 in stocks that is from Indonesia. Trying to find a broker that's willing to facilitate that trade and it be worth their while is a task in itself. But what really is interesting is that you started off as a derivatives exchange. You were encountering these challenges around the brokerage model and conflicts of interest, where essentially in some derivatives, you're betting against your client. They might have a hedging strategy, but in certain circumstances, they're betting against their client, which creates an interesting conflict of interest. And you saw, you weren't trying to create a crypto exchange, but you saw blockchain and crypto as a way to be able to do this in a more peer-to-peer fashion. So perhaps you could just dig a little bit deeper into the difference between a brokerage model and why you ended up looking at blockchain as a solution rather than starting at blockchain and then trying to launch an exchange.
It's a great question with many different parts, but I'll try to narrow it. Look, again, I think you nailed it. The biggest difference between an exchange and a broker, or at least a regulated exchange, is the exchange is not taking the other side of any of the trades, right? Those are, in an exchange model, there's a bunch of different market makers. Under our regulation, for example, we're not allowed to be a market maker. I know a number of exchanges that are out there are their own market makers, so they are technically, in a way, betting against their customers, especially with all these derivative exchanges that are popping out. Everybody's taking margin these days and trying to offer it, a la the BitNext model, right? And actually, to add on that, in terms of innovation, we looked at the whole margin trading, because again, a derivatives exchange is technically dealing with those types of marginable products, whether it's FX, whether it's gold, whether it's crypto, it doesn't matter. And one of the great things, again, that we thought about over the last month or two in terms of innovation is we thought, okay, people are launching these derivatives exchange on crypto, the leverage, it's very risky, but there's got to be a better way to do this on blockchain. So we actually launched a new category of token about 1 month ago, maybe a little bit more, just over a month ago, when we went live, called an SLT, or Smart Leverage Token. It's a brand new category. And what we've done is we've kind of created a token on an ERC20 basis, again, where we put the leverage inside the token. So there's a couple advantages for a customer to trade, say, this leverage token, or what we're coining as a turbo token, versus traditional margin. So in traditional margin, you have huge interest rate fees, right, that are being charged either by the second, by the hour, every 8 hours, or every day, which is really eating into your profits, because you're basically borrowing money to hold a bigger position, which you probably shouldn't be anyways. Number two is there's a chance that you could also go negative into your account, because the market might move, and we all know Bitcoin and crypto tends to move quite big percentage points, especially as an example in the last couple of days. You're going to get stopped out of your position, and then perhaps maybe even go negative in your balance. Even if there is negative balance protection, you're probably wiped out very quickly. And then, of course, the third and final thing is that it's very confusing to say, I think, the average crypto trader. Maybe a traditional FX trader understands it, but they're not really so much the crypto traders. The crypto traders are used to buying tokens and coins, and they can bring them to their wallet or whatever. But in a leverage basis, you're really going against that exchange or that broker that's offering it. So when we came up with this SLT, what it is it's just a token. And what's great about that is there's no interest, no overnight fees when you're buying this token. That you can actually take it off the exchange and trade it on other exchanges who will be offering the turbo token, which there will be, and I'll update that in a little bit. And the other good thing is you can't go negative in your account, because the value of the token is what your risk really is, right? So, and it's very easy to understand. You're just buying a token. You don't have to worry about margin calls. You don't have to worry about any kind of maintenance margin or closeouts or getting stopped out or any of these kind of terminology that maybe a traditional crypto investor is not used to. But it has all the same characteristics of trading a margin. And the way turbo tokens work is, for example, in Bitcoin, if Bitcoin moves 1% and you're trading a turbo token times 5, which is against the Bitcoin, then this turbo token will move 5 times the 1% or 5%. And then if you're turbo trading turbo token times 10, it would move 10%. So 1 times 10. So it's based on the percentage move of Bitcoin, percentage move of Ethereum. We also have it against Cardano. We also have it against Binance's BNB. And we also have it on, what's the other one that we have it on? I think it's Bitcoin Cash and Litecoin. And then not only can you go long in this, we have short tokens as well. So you can short the Binance coin, you can go long the Binance coin, you can, or Ethereum, whatever you want to do. So again, this is like the first token that's on the blockchain that includes leverage within the token. So I love like what we're trying to do in terms of, we tokenize digital stocks. Now we've come up with another real world type of instrument, which was margin trading, and we brought that to the blockchain with this new category called SLTs, or turbo tokens. Again, you mentioned when we met in Hong Kong, we launched the ability to now start offering our security token exchange, which I'm pretty happy to announce that we're basically just imminent about to get our MTF license, which is a real exchange license. It's the same license that the AIM or the London Stock Exchange or the BaFin has over in Europe, which is going to be able to passport to other countries all around the world. It is, as soon as we get the official registration from it, we're going to make an announcement on that, and we're going to move all the security tokens and everything over onto this really highly regulated environment. So with some really pretty exciting stuff that we were able to develop, and finally now that we're live and we're starting to gain good traction. And as I mentioned before about the turbo token, is we have a number of exchanges, both in the top 5, top 10, top 50 that have reached out to us, or that we've reached out to them, and are pretty excited to launch the turbo token actually on their exchange as well. So it won't be just on DX, it'll actually be around on all the other exchanges.
Awesome. I should just put in a disclaimer, having dealt with regulators for many, many years, there is always the possibility that it looks like you're just around the corner, but with regulators, they can always,
Right.
There's no guarantee that it's going to happen. So just want to put the disclaimer out there that there's many, many times when we've been there and then something new happens.
I definitely understand that. No problem. Absolutely.
Sure. Okay, so you said something interesting earlier. So when we first at Bank to the Future started investing and making shares in exchanges available, when we first started doing that, we used to go to CoinMarketCap, and there used to be a really clear ranking of volume in exchanges, and you'd see things like it was Bitfinex, it was Bitstamp, it was Kraken, many of our portfolio companies. Then all of a sudden, they started going down and down the ranks to these exchanges that nobody's heard of and nobody seems to be using. Yet they seem to have billions and billions in volume. So more recently, lots and lots of investigations have come out in terms of fake volume and all sorts of stuff. It's kind of skewed the statistics, and new people coming along would, try to find a reputable exchange, and then it would look like these tiny exchanges are really reputable. But you mentioned earlier, because of your regulatory regime, you can't actually do market making. So one of the ways that these exchanges, kind of appear to be bigger than they actually are, is because they operate outside of regulatory regimes. They are also, a lot of the volume is just themselves trading with themselves. So could you maybe explain a bit more about the requirements, market making? So what tends to happen on a lot of these exchanges is they give people 0 fee accounts. And then people start, creating artificial volume, which the exchange likes. I guess the user gets to do market making. But what are the exact requirements that you have to adhere to with regards to market making?
It's interesting. I think I said this in a panel I was on a couple of weeks ago when I was speaking in Barcelona. But I think the crypto industry, for some reason, is the only industry that really cares about what volume is going on. In the FX market, it's all about price, right? In the CFD market, it's all about what is the price. In the stock market, it's again about direct exchange access, getting your price. So, the volume is there, and it's interesting, as you said, there was all this for some reason, CoinMarketCap ranked everybody by volume, which probably was the wrong metric to even think of, I guess. Maybe it was at the time because everything was so new, they decided to do it that way. But really, the volume shouldn't matter to anyone where they are. It's where you feel comfortable, where you feel safe, what kind of tools is offered to you, where you think you're going to get the best price and be able to transact and have good customer service. These are the things that should be, in my opinion, should be driving people to certain exchanges, not because they're ranked number 2 or number 3 or number 5, because of exactly what you just said about the wash trading that's, drastically happening across in the industry. You have always heard of the fake news. Well, our industry has the fake volume problem, right? And the only thing that really is going to stomp that out is as these more exchanges do get regulated. And by the way, you can see, for example, Coinbase or Gemini or even Kraken, they're following very strict regulations out of the US. And they know the SEC is breathing down their neck. So I feel very confident their volumes are what their volumes are. But if you would have, say, compared their volumes a year and a half ago to what they are today, it's very different. But now they're reporting the real volumes. Maybe it's under 100 million, where before maybe they're at 400 million. Kraken, or not Kraken, Coinbase, and I think Gemini had always been pretty straight. And you just watch them, as you said, fall, tumble down. But you're right, these exchanges are coming out of nowhere, and they're just creating these fake volume. And it was kind of new for me that about the idea to have a trader on there with no fees and just letting them do whatever trades. But I think there's a lot of these algorithms, and there's these robots that are out there that are just basically buying and selling all day long. For us as a regulated exchange, we're not allowed to be a market maker on the exchange. We're not allowed any interest in a market maker on the exchange. And so we can't. And we also have the NASDAQ's surveillance system, which monitors trading activity. And one of the monitoring transactions that this does do is looks out for wash trading. And if it does spit out a report that can be reported to the regulatory body, right? So again, it's interesting, and it's always this frustration for me when, we're creating really great products and innovative products, and then first thing people look at is they go, well, what's your volume? Why is your volume so low? Well, it's not the proper metric. Can you buy Bitcoin? Can you buy, at a good price? Do you feel safe with us? Why are you not asking those questions? Why do you just care about the volume? So it's a little bit of a backward thinking, and I think more education needs to happen, but unfortunately, it just seems it's so drilled into the crypto community of volume is so important. And really, as you can see, it's not, because so much of it is fake. So it's a really, really quite a shame.
Yeah. So maybe you could share a bit about your the regulations and like the jurisdictions and that type of stuff, what you've achieved so far and what's coming next.
Yeah. So we were actually, I think, the second crypto company to receive the Estonian license for the exchanging of fiat to crypto and the custodial crypto. Today, unfortunately, it seems like those are a dime a dozen now. But back, a year and a half ago, 2 years ago, it was really a good one to have, and one of the first movers in Europe, which was great. There were countries like Malta and Gibraltar were still hadn't gotten their rules in, but they were trying to do something unique. Switzerland was doing it, and Estonia really kind of came in and was trying to set a new precedence for the crypto space, which was great. But we also realized we need something more, right? And in the EU, we actually had partnered with a company called NPS Securities, which would be, I guess, similar, say, on a US point of view of partnering with a broker dealer, where they have the regulation under MiFID, under ISMA, which is the bigger regulation here in the EU, for example, for securities, secure transfers of securities, or trading in the digital stocks, buying real world stocks, instruments like that. But with the MTF that we're going to be receiving soon, disclaimer, that's a whole new ballgame, because that really puts us under the full regime of, again, MiFID II in an exchange, not a market making service, but in an exchange. And we're working very, very closely with them. And I think they're pretty, even the regulatory body is very excited about getting us launched with the experience that we have with NASDAQ, technology that we're using, the people that we have on board and the experience. They've been very, very supportive, but it's taken almost 2 years and over 4,000 pages to get this thing done. But that's I think going to be a big game changer from a regulatory standpoint. And that's what's really going to allow us to open up this whole new secondary market trading on STOs and stocks. The crypto will be a component, of course, but really this whole new driving of this whole tokenization of anything, whether it's real estate, other stocks, companies, that's where I think the MTF is really going to be able to start now finally driving this forward.
So do you know, has anyone successfully launched a security token under an MTF yet, or are you going to be one of the first?
So the only MTF out there that is doing something in crypto is LMAX, but they're doing it as a derivative, right? So they've had an MTF for, I think that's how they launched about 3 or 4, maybe 5 years ago, 6 years ago. And they were traditionally an FX CFD broker. And then they added crypto about 1.5 years ago to it. But again, it's as a derivative. It's not as anything else more than that. So no different than, say, a BitMEX feature or a eToro or something. But having said that, I've heard there's a few, maybe one in Liechtenstein that's trying to do something, and maybe in the UK somebody's trying to do something else. But again, it takes a very, very long time to get this done. I know we've had a very nice head start in terms of this. And, again, I know it's imminent that we're going to be making some news here very, very shortly. It really is different because it's like in the US, for US customers that are listening, it's like getting a CFTC license. Or if in Japan, it's even bigger than the JFSA license that's out there from Japan, right? Because this is a real exchange license, which allows us, again, we'll be able to passport into the US. We'll be able to passport into Japan. We'll be able to passport into Hong Kong and China and other areas because it truly is a real exchange license. It's kind of one of the holy grail license out there for an exchange.
Interesting. And so with that, if you wanted to passport into the US, would you have to do an ATS, or there's another way around it because of the MTF?
I can't quite remember the exact regulation, but if I remember correctly, it's either we need the broker dealer, and then we need a broker dealer to represent us there, and then the broker dealer would sell the services onto the exchange from that angle. But I'm not sure if we need to register with was it ATS that you said? I don't remember.
Let's leave that for the compliance people.
Yes, exactly. I just know it will passport. It will passport over.
I mean, this is all, this is brand new. This is innovation. This is cutting edge. Right. And everyone does their best to comply with all these laws and regulations, but going on a public show and committing to, yes, this allows you to do that is very challenging because right. These things haven't been tested. So awesome. Okay, so maybe I think what we'll do is maybe Famida has got some questions that she's pulled up from the live chat, and we'll try and see if we've got any more questions. But just while she's gathering those there, and before we go through to the second half, where we'll go through some more Bank to the Future updates and portfolio news and stuff. What's the future vision? What would you like to get across about what DX.Exchange is up to next, and where do you see this all going? Do you think it's all security token exchanges? Do you think maybe some of the unregulated exchanges are going to go under massive regulatory scrutiny? What are some of the trends that you're seeing that you think DX.Exchange is ahead of?
Okay, so in terms of trends in the marketplace right now, definitely the regulatory bodies are starting to wake up more. The whole Libra thing that kind of jump started, I think, with regulatory bodies in all the jurisdictions, whether it was in the UK, Russia, EU, US, it really kind of woke them up a little bit more that they need to start getting more involved. So I think as far as a lot of the exchanges, especially the big ones out there, I think they're being talked to by a lot of jurisdictions at the moment. Some of my sources say there's some very serious discussions going on of people either who took US customers or didn't take US customers or is sitting in Europe and not complying to certain rules or KYC. There's a lot of stuff that's happening in the undercurrent right now for sure. What results will happen from that? Who knows, right? But it will be a good, I think, for the industry. In terms of DX, I think there'll always be room for buying and selling crypto, and that needs to be on exchange, and we will offer that service. We will also offer, continue to offer new innovative products. If you want to trade margin on exchange, don't go trade it on as a derivative product. Come and trade it as a token. It's much, much better for you. And we're going to offer that kind of service as well. But where I see the real value and the long-term growth for DX is more in the first phase, I'll say, is in this secondary market offering of startups, of companies who just raised money, of funds, or where they need some sort of exit after, whether it's 6 months, 1 year, 3 years, 5 years, they need some sort of exit for their investors who are investing. Even individuals now who are investing in here, as you just created your secondary market space, right? You're giving an opportunity for investors who came in early to be able to exit out, right? And right now, the way that's working in the world today is it's kind of scattered around the world with different regulatory requirements for each individual, whether they're accredited, non-accredited, and it's difficult for investors to come in. One of the things I really liked about the ICOs was it allowed the average person to finally get in where the VCs weren't getting in before, right? The VCs were able to take it all. In the 90s, it was all the insiders who had lots of money at the Goldman Sachs of the world and stuff. But now, I think with this shift with security tokens, young companies raising money in platforms like this, or in our crowd, or some of these other crowdfunding platforms, they're going to want to have some sort of liquidity at some point. And I think, being DX with our MTF license and be able to put it onto a real exchange, we can become that global secondary market space for the world. And so I see that as kind of more of our longer term future. And then even beyond that, how does that morph in? If I really want to get, visionary and creative, I could even say that if we can really grab this secondary market, which I believe we have a really big opportunity, especially with this MTF, is that real companies will now want to tokenize their stocks, and real private companies, and they're going to want to come to our marketplace because we will have that global marketplace around the world. It's not just, an E-Trade in the United States or an IG in the UK, or one of the Unibanks or something in Germany, right? It's one marketplace that has the whole world that's coming to it. So I see that is kind of more where this is a great marketplace where everybody's coming, everything is tokenized, and whether it's works of art, whether it's real estate funds, whether it's real world stocks, whether it's companies, this is kind of how I see the long-term future for DX, and that's where the real value is. So anyone getting in early with DX at this stage, I think is getting in at a great level, and if they're there for the long-term ride, it could do very well for all of us.
Okay, Famida, have you got any questions from the live chat for Daniel before he goes?
Yeah, actually, we don't have any live chat questions actually, but we do have some viewers, so they've been sticking around from the beginning. But we do have some general questions from other platforms, so I'm just going to go ahead and ask these questions. And obviously we do have latecomers, so there will be some questions that you might have already covered in your introduction for DX. So I'm just going to go ahead and start with the questions. Daniel, is that okay?
Sure.
Okay, cool. So is DX.Exchange a custodial or a non-custodial exchange?
So we have a custodial license that we can hold crypto on behalf of customers, but we do not hold fiat on behalf of customers.
Okay, great. And what are the KYC requirements on DX.Exchange?
So we have basically 2 levels. So the first level is if you basically do your name, your email, and your phone number, and they're verified, you can trade up to $1,000 worth of crypto without any additional KYC. But if you want to trade anything above that, then you would need to provide some sort of government official ID and address verification.
Awesome. That's very straightforward.
Yep. Try to make it as easy as possible.
Yeah, exactly, because KYC is so challenging.
Yes.
Okay, so can you explain more about how DX.Exchange keeps our funds safe?
So we have all funds that come to the exchange go straight to a cold wallet storage, and we leave everything in that cold wallet storage, and it's multi-sig, and It's got all the bells and whistles for all the tech guys. They know how to protect it. We only keep as minimal possible on the exchange, and I guess you would call a warm or hot wallet for any withdrawals that are needed for that day.
Perfect. Are there any plans of launching a mobile app for DX.Exchange?
So we actually have 2 mobile apps in terms of one for Android and one for iOS already. In fact, probably 60% of our users use our mobile versus the web version.
Awesome. So then the last question here we have is, can we use DX.Exchange with a hardware wallet?
You mean in terms of taking your crypto and putting off to a ledger or something like that?
Yeah, I guess. Yeah.
Yes, of course.
So some exchanges, when they're self-custodial, they give you the ability to, I guess, use a wallet, hold it on your hardware wallet, and exchange peer-to-peer, like some of the centralized innovation.
No, I don't believe that feature is there, but I'll have to look into that. But I'm pretty sure that's not there yet.
Okay, awesome. That's all I have, Simon and Daniel, for DX.Exchange questions.
Okay, great. Well, thank you so much for joining us, Daniel. As I said, we're going to have the pitch live for qualifying investors for the next 90 days. We've always found that August has been a quiet month, so we'll look forward to more and more people returning from their holidays and starting to think about investing again. And also our goal, if you are in the US, will be to open up the US SPV so that people can invest in DX.Exchange from the US, but we've got to get that all signed off by our broker dealer, and we're just doing a new integration for our escrow to beef up some of the compliance requirements that we have in order to make that happen. Don't want to get too much into the boring details, but our goal is to try and make that happen. So just showing that we'll let you know when that changed. So thank you very much for joining us, Daniel. We're just going to continue the show and go through some of the new updates and questions at Bank to the Future. So unless there's anything else you want to say to the audience, we'll say goodbye.
No, I think thanks very much. And maybe I can join again once that regulation comes through, and we can have another roundtable in September or something.
Sure. Okay. That sounds like a good idea.
And I can update you on the MTF.
Oh, yeah. We'll look forward to that.
Okay. Cheers,
okay.
mate. Thank you.
Thanks.
Bye.
Bye-bye. Okay, so just while Daniel's doing that, I think we've got about 20 minutes left. I just wanted to go through some of the screen shares. So I'm going to share my screen, and then we can take some of the questions directed at Bank to the Future and myself, Amida. So let me do the screen share, and I'm going to take my camera off for a second. I don't want to log in while I'm on my screen. I don't want to gox myself. For those familiar with the term, goxing means that you do something on live screen that compromises your security. I don't want to do that. I was going to show you the new fund section, but what I'll probably do is refer to last week's episode 25 of Bank to the Future Live, where we gave a live demo. Thank you all for your feedback on the fund section. We've been receiving our first fiat deposits through the new fund section and the new banking partnership, and we've been receiving the first round of feedback. So in the coming weeks, we'll be making some new changes as well. In terms of deals that we have right now, we have live on the platform. We got Edge that went live last week, and it's already passed its funding goal. If you're on the Invest tab, you can check it out over here. This little dot here signifies the minimum funding goal, and here's the total funding goal. Edge is already 79% of the minimum funding goal. The lead investors are Fembucci Capital and BitMEX Ventures, the venture arm of BitMEX, the exchange. And it seems to be pushing towards its funding goal. And also DX has just gone live now. So we just sent out an email notifying people about the deal. And the fact that we're live with Daniel at the moment. So you can check those out both there. Also, in terms of pitches coming soon, currently working with about 6 deals. The one that we can announce is that next week we should be putting, if all goes to plan, Concrete live. Again, we'll be doing it on an extended time frame. We normally do 30 days because most people like to wait. They tend to wait till the end of a pitch, till they actually start investing. We're doing them all on an extended time frame because of the quiet summer period, and also because we're working on the changing model for our opening it up to US investors. So you'll be able to see that, and we'll try and get the Concrete team on episode 27 of Bank to the Future Live if you're enjoying this format, so that you can start asking questions. On the secondary market, we've still got our first 6 deals. I think we got there. We had the Bitfinex SPV, the Circle SPV, the Ripple Labs SPV, the Blockchain.com SPV, the BitPay SPV, and the Kraken SPV. One of the things that we'd love to do is have a feature where if you're a qualifying investor, then you can just simply press a button and auto build a portfolio in the largest companies in crypto. As we get out of beta, we're looking forward to making this easier and easier for you to build a portfolio in the largest companies in crypto. The other thing is that with the new funds release, we also had to introduce, so I'm just going to go, I don't want to log in here, so I can't go into the funds, but normally if you were signed in, you'd be able to see the funds. One thing we have had to introduce is part of our regulatory requirements. For some of you that might not be familiar, the whole crypto exchange industry is going to change very quickly at the moment. Crypto exchanges have traditionally operated outside of regulations, and therefore standardized processes have been developed for very fast deposits and withdrawals. But they're also going to have to comply with Financial Actions Task Force requirements, which means that they're going to have additional data, things are going to change in terms of regulators making them meet more of the standards of banks. Now, Bank to the Future has always been in a strange position because we are a securities business, which means that we fall within securities laws. And so one of the reasons why when tokens were becoming more of a thing, we had a compliant way of doing it, is because we've always had to adhere to securities laws. But at the same time, we're also working with financial innovation, and many of the largest crypto companies have used our platform, or we make investment opportunities in equity in those companies available. And so when somebody comes and they've made their first investments in crypto and they've used an exchange, they've experienced, how fast and efficient things can be when they don't have to adhere to many of the regulations that we would have to adhere to. And so if they first started getting involved in crypto, they might be used to how crypto exchanges work, but there's obviously going to be a lot of change. And as a securities business, we've always had to adhere to those regulations. And so some people, find it a bit frustrating about the speed at which we can do deposits and withdrawals, because we have to do lots of checks in between. We have to do it via a third-party escrow, and we have to adhere to lots of regulatory requirements as a securities business. What we've been working on, based upon our customers' feedback, is obviously the ability to automate deposits and withdrawals, because most of our customers are used to crypto exchanges and the speed at which things can happen, which has meant that we've had to integrate with several third parties to get that speed that people are used to and want, but also still meet simultaneously all of the regulatory requirements we have to adhere to. We've introduced a lot of third-party services to be able to speed all that up in terms of KYC, in terms of sanctions checking, and all the things that customers don't necessarily really care about, but these things happen when you sign up for bank accounts and brokerage accounts and regulated businesses. So the first phase was making those integrations. Now, unfortunately, what that does is it puts up the cost, obviously, for us, because compliance is like a business now. There's lots of services out there, compliance as a service. And many of our portfolio companies like CoinFirm, they're doing processes that allow that. But what it does is it means that there is a real cost to deposits and withdrawals. So what we've decided to do at Bank to the Future is we cover all the cost of the deposit, even though it costs us approximately 0.5% with all the escrow, all the KYC, everything we have to do. We cover that when people deposit. We've got a great service for depositing dollars and Bank to the Future tokens and various other things. And obviously Tether as well for those that want to put a deposit on the secondary market. But it also means that we have to recoup the cost in the withdrawal. So our policy has always been at Bank to the Future, if you look at the terms, that we pass on any third-party withdrawal costs. Now, we do get a bit of an unfair comparison because people compare us to crypto exchanges, which are going to have to beef up all their regulatory requirements, and the costs are going to go up because we don't know a way of complying with those without actually increasing the costs, because that's just the side effect of it. Or people are comparing us to a bank, where people are saying, well, it doesn't cost that much to withdraw funds at a bank. Well, a bank is where you store money. We're not a bank. We wouldn't recommend anybody storing money with Bank to the Future. The only reason that you're depositing funds is if you want to use it for the purpose of investing. And this is a high-risk, high-return securities investment whereby you're looking to make many times multiples in an investment in a very high-risk environment. So we have to, in order to recoup those costs, and we have to pass on any third-party costs in order to comply. And so we've introduced a higher withdrawal fee than maybe you're used to, which is that we have to introduce a 1% withdrawal fee in order to recoup those costs. We're not charging it to you on the deposit, but we are charging it on at the withdrawal. And so that's something that we have to announce to everybody. But at the side effect of that is that we get to automate the deposit process, the withdrawal process, speed everything up. We've already released the beta for automated deposits, and we'll also be doing the same for withdrawals. And it also paints the use case as well of our future plans to launch the Bank to the Future exchange, the security token exchange, and work with some of our partners, many of the companies that we're working with, and really push that peer-to-peer use case as well. So we're excited about seeing that, but yeah, we're at a shifting time, and yeah, we're excited to release that. But that just explains why those changes have to be made, because we've always had to pass on third-party merchant processing fees, and the costs have just increased for us. So that's the situation with that. So for me, maybe I'll move back from screen sharing and over to my screen, and then maybe there's some questions from the live chat.
Thank you, Simon, for clearing that up. Telegram was blowing up the other day about the fees, the wallet fees.
Yeah, absolutely. And for those of you watching, if you want to join in the conversation, we do listen to our customers. When we get things wrong, we try and listen. When we have to make changes, we try and use this live show to give people updates, and we try to listen wherever we can, and then help you understand why we have to make some of the decisions as well in this completely fast-changing regulatory environment. So if you want to get involved in the conversation on Telegram, then it's at BF_token is the name of the group. Please be aware of other scammers. There will be people on Telegram that will try and email you, impersonate me, impersonate our support team. Be very careful. We will never come to you and ask you to send us money. Everything would happen through the platform. So be careful of those phishing attacks. There's lots of scammers out there that want to get you. But if you want to join the conversation, we created the Telegram group during our token sale, and the name at BF_token has kind of stuck. So make sure you're in the official group and not some scammer that set up a group impersonating us and they're going to ask you for money. Also, please do, if you want to make sure you subscribe to our channel and hit the bell symbol where YouTube will notify you each and every time we go live. And we're also trying to getting these. If you prefer Facebook, then like our page and we broadcast these there, or follow us on Twitter, and we also broadcast these on Twitter Live.
I just also wanted to point out that on the Telegram groups that we have, you can actually check to see who's admin. So just to make sure that you've got the right handle. So say, I mean, this is what happened to me recently. Somebody direct messaged me posing as Simon Dixon, and it wasn't normal. So I quickly went to double check with Simon and double checked Simon's handle on Telegram. So just make sure that you double check admin and who we are before you accept any direct messages.
Thanks, that's it.
Yeah. And moving on to some of the questions that came through Telegram. Simon, I am aware that we've only got a few more minutes left of this live. How do you feel about answering questions?
Yeah, well, let's do it. I think we started about 5 minutes late. So I think we can do another 10 minutes of questions. I'll try and get quick answers to them.
Great. Okay, so it was just actually one single person that came through on Telegram with a bunch of questions, which I think are very important. He also made a comment, and the comment goes like this. It is great to see that Simon is proactively commenting on the economic and regulatory developments in the industry, as well as the new initiatives in fintech. But at the same time, the Bank to the Future investors as a community are not getting the necessary sponsors on their investments. So I guess what this person's concern, and quite a lot of our investors' concerns, are updates from investments that they've made. How are we going forward with communicating and keeping investors up to date?
Yeah, okay. So in a world where the internet drives everything together, it's very difficult for us to compartmentalize and segment when people are on different social media channels and they want the information there. But unfortunately, compliance means that we have to only present the information in the right place. So we need to ensure you're a qualifying investor before being able to give certain information. So we can't just answer something about an investment in Telegram. We would have to do that in the investor zone, and we've set up special places for that. So firstly, I've started giving a lot of content on my Twitter profile and my personal YouTube. Those are my personal views, not the views of the company, not Bank to the Future. And I try to give a lot of content around there, nothing to do with the company, but just my personal opinions and views about where the economy is going. Obviously, I can't go on my personal Twitter and start giving updates about investments, because that is Bank to the Future. So in terms of our commitment to our investors, we've decided to do Bank to the Future Live as our weekly channel, as our weekly way of giving updates and trying to engage with our community, and me personally answering questions. But also, we are not the actual companies raising funding on our platform. So we want to invest, and we have invested more resources in trying to get updates from our companies. But we cannot, and we legally can't write updates for our companies, because we don't know. We're not running the companies. We're not operating the companies. All we can do is request updates. Now, some people are great. Shout out to companies like Exodus, who are just awesome at giving their quarterly updates. And other companies that are just really good at doing that. MadeSafe has always been good at giving their updates. I don't want to name and shame, but there are some companies where we're very disappointed with the level of updates that they're giving. There's several challenges from their perspective. One, they don't have dedicated investor relations. They might just be a team of a few people and trying to find the time to do this. While we would love for them all to have the time, some of them just don't. There are others that just don't take their responsibility as seriously as we would like. I personally know we are, as a company, we've raised our funding through Bank to the Future. We try to give a quarterly video update to all of our investors, but sometimes it's a bit challenging to do that, because as an early stage company, you're trying to do so many things. Add to that the fact that there might be investors that are not acting in the interest of the company anymore, and are sharing information with the wrong people or using it in a wrong way. So it is a very challenging thing to achieve, but those are all the excuses and reasons. But what we want to do, and what we have always tried to do, is firstly, when you do post those things in the investor zone, that is the place to communicate. We can't just post updates in Telegram. We can't do it on Twitter. It's not in line with our compliance rules. But when somebody's not responding on the investor zone, then we try and jump in. We pass those comments on, and then we try and do our best to get an update from those as well. And there are some companies that they do reply to us with an update, but they say it's all sensitive information. We can't share this information. We're waiting for it to be public information until we share it because we don't want it to leak. So it's a very challenging thing and a fine line that we have to try and juggle here. One initiative our team has come up with, and there have been several meetings around the execution of this, is trying to make it easier for our clients by us, having something like this. I can't do it, obviously, because if I spent all my time interviewing all of our portfolio companies, I wouldn't be able to run the company and do that. But we're looking at bringing in a new resource and new hires in order to actually pull up a video, interview some of the people from our portfolio companies, and support them where we can. Our original idea was to use the Bank to the Future token as a rewards mechanism. But we found out that that wasn't really much of an incentive because someone's time poor doesn't really care about getting a few Bank to the Future tokens and giving an update. That was one of our original theories. But we are looking to dedicate more resources to making it easier for the companies to give those updates by maybe us taking some of the pressure off. But at the same time, we are very starved of resources as well. And it's a challenging thing, but we appreciate that, we know that issue exists. We are doing what we can to try and get those updates, and we'll definitely have more meetings and take your suggestions on initiatives that we could do to try and get those updates in, given all of the constraints and challenges that we just talked about. So that definitely wasn't a short answer, but it's an important topic.
Yeah, thanks for that, Simon.
Why don't we do one more question, and then we'll pick it up again next week with some of the good ones.
I do feel like this one is going to be short and sweet, maybe because of what you just said in terms of like not being able to give certain updates on certain pitches. But the question is, are Pandai and Startcoin dead?
Head over to the investor zone. I can't comment publicly on their situation. I know that Startcoin has been giving some updates, and if you head over to the investor zone for Pandai, he gave an update as well. So those updates are there. You just have to look through the archives in the investor zone, and that's the place we can communicate on those. I can't just give confidential information. We're subject to NDAs. We can't just talk about it publicly. But they gave their updates there, and that's the place to communicate around those things.
Perfect. Okay, so the last question then, Simon.
And I would say as well, a note that this is public information because it was announced, but Startcoin Holdings recently paid out a dividend, and they've switched to being more of an asset holding company than the original vision of what they originally wanted to achieve.
Right. Okay. So the last question is, one of Simon's vision was to create a proactive community that would research, be close to companies we invest in on the platform. Token rewards would be used as an incentive. What is the plan to make this happen?
So that was one of our original ideas and visions. We kind of beta tested it, and we didn't get too much engagement. So I guess we could look at that again at some point in the future, but I think that with the imminent launch of the new use case for Bank to the Future tokens, integrated with our security token exchange, we saw a lot more engagement in terms of paying discounted trading fees, staking them in order to use them for priority access to deals. And when we put out a reward out there for the companies that want to give updates and for people that want to do more additional due diligence, either we didn't have a really good process for doing that, or it just wasn't something that people wanted to do and engage in. So we don't think that particular use case from our initial experiments has been a success, but the other use cases for the Bank to the Future token have proven to be much more popular. And so we're dedicating more resources to the security token exchange and that side. and integrating that with the Bank to the Future token. And one other thing that is worth noting is I will speak to our marketing team about when we'll launch it. But we have a Trello board with our entire history, our entire roadmap, and the ability for everyone to comment on the features that they'd like to see. So if you think that that's something you'd like us to prioritize, then you can add a comment on that Trello board for the feature request, and we'll see how popular that is relative to other things that people want to see.
Perfect. I think that's it for this week's edition, Simon.
Awesome. Okay, so thank you to Daniel for popping in and giving us more information about what they're up to at DX.Exchange. Famida, thank you for moderating and picking out some questions and helping us flow this all the way through. And that's going to do it for episode 26 of Bank to the Future Live. Remember to subscribe, share, like, retweet, join us in your favorite community or social network, and we will go back to any of the comments. If you're watching this on the recording, do use that in order to ask your questions so that we can try and pick them up for next week. So thank you for your time. Thank you, everybody. And we'll see you this time next week for Bank to the Future Live, episode 27.